What you don't know can hurt you, and what you do know can set you free. That's why we interview subject matter experts for your small to medium-sized business and personal finances, because knowledge is power, but experience is everything. Welcome to The Tipping Point. The Tipping Point is brought to you in part by Tirani and Velez LLP, your tax and accounting subject matter experts. Welcome to the show, everybody. I'm your host, Gabriel Velez. Our guest today is Sherly Waterman, a business consultant at Alliance Payroll Services. As a human capital management consultant, Sherly's goal is to become an extension and an asset to her clients' customer service model. She does this by offering them solutions that can streamline their business processes. Welcome to the show, Sherly.
Thank you for having me. I'm excited to be here.
I'm excited to talk payroll. As far as payroll is concerned, I look at it as one of the crucial things for businesses and one of the biggest risks for businesses. So, starting off the podcast, I just want to open up with what do you describe as human capital management?
That's a very good question, because a lot of my clients, when they hear human capital management, they're like, "What is that? Is that like handling the financials?" But human capital management, what it is everything that is in between hiring to separation or exit of the employee, right? It's pretty much managing the employee information within a system, right? So from hiring, from the moment that you bring the new hire into your company, to the moment that same employee retires, right? Because we do have a lot of companies that have employees that have been in the company for that long and they retire. So everything between hiring and separation, all of the benefits in between that.
Yeah, just managing the whole employee experience. And, I think there's a quote out there that says, something like, if you treat your employees right, they're going to treat your clients right. And then that's going to help your business operate. So that's a great topic to talk about. In my world, in the tax world, and we do some controversy and some, representation of audits and things like that. Payroll taxes are one of the gnarliest things if you get behind on it. So, where do you think a payroll company plays into that and helping clients stay out of trouble?
Well, I meet clients every day, day in and day out. And the main reason why clients are looking to outsource the payroll, it's compliance. That's the number one reason why. They want to mitigate the risk of having to deal with the IRS, Department of Labor, and Department of Revenue. When you do payroll in-house, the difference is that you're the one sending the tax payments to those three agencies, right? Department of Labor, Revenue. And so that is a very tedious work. Usually when somebody's doing it in-house, they have a person they're dedicating their entire time just to process the payroll. As the companies grow, as they are adding more companies or they are adding more locations, they adding more employees. And so that work becomes even more of a burden for the person that's processing the payroll in-house.
Administrative
burden. And so that's when they start calling professionals like me, because they said, I can't, we're going from 30 employees to 60 employees, and this is becoming too much of a administrative burden, and we don't want to deal with that. That is one of the main reasons. Now, the risk also that involves you doing the payroll versus having a payroll company that can do it for you. It's one of the biggest things, because a lot of times I get a lot of clients calling me to do the payroll for them until it's a little too late. They've been doing it in-house.
They're already in trouble.
They maybe did not send a payment on a particular month. And then they're getting letters from the IRS or Department of Labor or Revenue with a penalty. So by that moment, yes, we can help them, but they still have to pay that penalty. There's no way around it. You can outsource your payroll and pay your payroll company to take care of it, but
Right.
that penalty, you have to take care of it.
Yeah. You know, I mean, when things go bad, they go really bad in the payroll tax world. You know, the reason being is these agencies, they look at these funds as not your funds. You know, once the paycheck date passes, those are no longer your funds. Those are trust funds. You are holding money on behalf of your employees, and those employees are going to go file tax returns, and they're going to claim refunds, or they're going to claim those credits. And so IRS, for one, looks at it like, hey, we're getting screwed on both ends because we're going to have to give your employee a refund and you haven't paid us. And so they come after employers who, do that things very, very, very aggressively.
Yes, yes. Now, there's another reason why companies make the decision to outsource the payroll. And one of the things that I've seen throughout my career in the payroll world is that companies don't always know how to classify their employees.
Okay, yeah.
So that is, I would say, the number one reason why companies get penalized. Example.
Okay, go ahead.
I am a government contractor and I do construction for the state of California.
Yeah.
Right? So I have engineers, I have architects under me, I have people who do plumbing, everything that entails construction, right? So because I'm not a payroll company and because I am not an accountant,
yeah,
I'm going to say to you that the person that goes to this site to do this kind of work, call it plumbing, I'm going to pay them as a 1099, right? As an independent contractor.
Yeah.
Not as an employee. And so when you do that, if you don't follow the qualifications of what a 1099 is, the IRS, either one of the agencies, are going to find out because they're going to see that misclassification on the payroll. That is the biggest reason why employers get, penalized, is the misclassification. So another reason a payroll company can help you is making sure that they are classifying each employee the correct way.
Yeah.
Now, I always tell my employers, if you don't want to sit down with the payroll company to figure that out, you can figure it out. We have technology. You can go to Google. You can find the website of the IRS.
Yeah.
And then you can do a search on the IRS website. What is an independent contractor? What are their qualifications? And you will find a list of 10 to 15 things that will qualify that employee as a 1099. Now, that is another tedious work for you to do, but it can save you if you want to continue to do the payroll in-house.
Yeah.
You can find that out. But those are things that a payroll company will help the employer manage. So that they don't get that penalty.
Gotcha. Yeah. And, I think it's important to mention that California is even more aggressive when it comes to, misclassification of employees than even the IRS is, right? And so, there's a million ways you can misclassify an employee, right? You can misclassify them, like having them listed as an independent contractor when they should be an employee. But then there's different types of employees, right? I mean, you want to talk, like exempt, non-exempt,
So yes,
hourly salary, yeah.
And that's now we're talking about W-2s, right?
Yep.
What is considered a W-2 employee is based on different factors. You can be a nurse working at a doctor's office, and you're being paid as a salary employee, right? You might get a bonus, but that qualifies a person to be a W-2 because this nurse is going to an office that is being provided by the employer. So
yeah,
what qualifies you as a W-2 is when your employer is providing you with all the tools that you need to function as a nurse.
Yeah.
Right? So if you go to a doctor's office and they're providing you with everything to assist the patient, including the office, that qualifies you as a W-2. We also have examples of realtors, right?
Yeah.
We have in the real estate industry, we have realtors, right? So a lot of times realtor agencies don't know if that realtor they're paying, it's either 1099 or W-2, because a lot of them are exempt, right? There's exempt and they're non-exempt. The difference between those two is exempt means that you are getting paid a salary. And correct me if I'm wrong, because you're the accountant.
Okay.
But this is what I learned from professionals like you.
Yeah.
My understanding of exempt is someone who gets paid a salary or an hourly rate every pay period, right? When they get paid on their payroll. But they don't get paid like a commission, for example. A professional who gets paid a base salary, let's say on a sales department, gets paid a salary plus a commission. And those are considered non-exempt. Is that right?
Well, okay. So, and I can probably have a labor attorney on to describe it, but basically exempt versus non-exempt. Exempt literally means that you're exempt from having to pay overtime to this employee. Okay. And so, in order to be exempt, you typically are going to be on a salary as opposed to an hourly wage. And on top of that, just because you're on a salary does not mean you're exempt. Some people are on a salary, but you still have to, calculate their hours and see if they work overtime and pay them for said overtime if they work it. And then at that point, you're dealing with, figuring out what their hourly wage is based off of their salary. So, in order to typically in order to be exempt, you have to be more in a managerial and an autonomous type position where you're overseeing people and you're not getting direct supervision on a day-to-day basis. It's more that's more of an exempt employee. But this is a very hairy topic, and honestly, the more and more aggressive California is getting, the more and more I'm telling my clients, like, you need to err on the side of caution. And if you want to take an aggressive stance, we're going to need an attorney to be on, because it's like, at this point, I put everybody on payroll. Don't even put anybody out as an independent contractor. If they're working on a regular basis for you, the California's going to look at them as an employee. And again, we're erring on the side of caution, because we don't want to give bad advice that 3 years down the road, when the IRS or the EDD comes back and audits clients, they're opening up 3 years at a time, all the time. And you're already a year late, so the penalties have racked up. And the thing with payroll taxes, like I said earlier, is that they're trust funds, and doesn't matter if your corporation goes defunct, doesn't matter if you go bankrupt. You're in bad shape. They're coming after you no matter what,
Right.
and they're coming after the responsible parties, whoever it is within the corporation or within the LLC or what have you. The first thing that they do, is when you have been found to have not made your payroll deposits, a revenue agent's going to come to your office and they're going to take an interview to figure out who was the responsible party and who they're going to collect, even if the business goes bankrupt and even if it goes defunct. And then, at that point, they attach it to the individual. You typically whoever was the treasurer, because they have the fiscal responsibility for the business. And on top of that, if payments aren't made timely, they can assess what's called a trust fund recovery penalty. And that thing's nasty also. It's the outcomes for these types of situations, never great. Like we when we represent our clients through back payroll tax issues, it's typically trying to mitigate the exposure as much as possible. But once the taxes are assessed, you can't offer and compromise out of them. You can't really negotiate much. You're just,
I have a little anecdote of a client that he wasn't my client. Eventually became a client on the spot because he asked me to come to his office, and I went, and he said he needed payroll. And the first question I asked him was, well, have you been using a payroll company or have you been doing in-house? He said he's been doing it in-house. And then we had a little timeout. I thought he was going to the restroom, to be honest with you.
Yeah.
He wasn't going to the restroom. He stepped out. He said to give him a second. He came back. And when he came back, he literally threw a letter. Like, let's say we're sitting here and he threw the letter at me, like in the table. And I looked at it, it says the IRS.
Yeah.
But the letter was closed. And I just looked at it. I didn't say anything. He said, hey, can you open the letter? And I said, with all due respect, I don't want to open the letter because that looks like it's your company. It says your name of your company. He said, no, can you open it? Just open it. And then when you open it and you see it, tell me, how can you help me fix the problem as a payroll company? So, okay, I went and I opened the letter and it said $372,000 in back taxes.
Wow.
So I looked at it and I was very nervous to tell him the bad news, but I had to because it was the name of this company in the check. So I looked at it, I saw it, and I said, hey, like you told me you've been doing payroll in-house. He's like, yeah, I have. Have you been sending the payments, to the Department of Labor, Revenue, quarterly deposits? And he didn't even know what quarterly deposits were.
Yeah.
So, because his expression. So I said, I'm guessing you don't know what I'm talking about, but you own the IRS $371,000. And it looks like you have not done this for the past 4 years.
Yeah.
At that moment, he looked like he was looking at a ghost because he was like, he knew he was going to lose his business. And so I didn't say anything after that. He said, listen, can you go ahead and process payroll for me? I said, I can process the payroll for you this week, but that's not going to fix the $371,000. You still need to pay for that. And so, the moral of the story is don't try to save money or do something under the table.
Right.
Because it's going to catch up with you. Like, it doesn't matter if it's going to catch up with you a year later. It could take 20 years for the IRS to catch you.
Right.
But they will, because they follow a trade when people are not doing things the right way. So that was the moral. So I did the payroll for him, and literally a month later, he called me and told me he had to close the business.
Yeah.
Because he couldn't afford to pay the $371,000. He said, I got to close the business.
Yep. Well, yeah.
And it's very sad. It's unfortunate.
Right. And I don't know, continuing that story. I don't know this person, but sometimes business owners, they start to try and scale their business. They bring on more employees and they think that, hiring somebody at minimum wage to be a quote unquote office manager, right, that doesn't have the skills necessary to perform something as critical as payroll or even HR and compliance issues, and then that person comes to them and says, hey, you have to write this check, and then the boss is like, oh, I don't have money in the bank right now, can we just hold off on that? This assistant doesn't know, and who's going to end up holding the buck at the end of the year, or at the end of the day? It's going to be the business owner. It's going to be the responsible party. And, the skill, you need skilled workers, you need professionals around you. I think that's part of the lesson to be learned,
Yes.
and the risk isn't just from agencies. It isn't just from, failure to file and failure to pay your taxes. The risk is, your employees, the people who at my office, I consider family, right? And we're friends, and we, outside of the office, we talk and things like that. Things can turn very ugly if somebody needs to be terminated, or if somebody feels that they're owed something that they weren't given throughout the life, and then you have employee underreporting issues, lawsuits, things of that nature, where had you done the work ahead of time and hired professionals to help you out, you could mitigate that risk. You can't eliminate it,
Right.
It's mistakes will happen, and they can cost you a lot of money. It's best to err on side of caution.
I'm not from here. I'm originally from Nicaragua,
Yeah.
and I've been in the United States since I was 14. It's been about 30 years, and I learned. I just remember coming to this country and learning one of the sentences that I never forget. And you see it even in movies. Sometimes it's funny because you even see it in movies, but there's something that is really guaranteed, and that's debt in taxes. I never forget that. And I think
Yeah.
it's also because my dad was the CPA of the entire Social Security department in Nicaragua. And my dad was such a, like you, uh, everything had to be follow a compliance.
Yeah.
Growing up, everything was like, you got to do things the right way, because if you don't do that from the beginning, and I emphasize this to any startup business that might be listening to this conversation, I will encourage you. I mean, I'm very passionate about this, to, as you grow the business, to start doing everything according to the labor laws
Yeah.
of the law of the land, IRS, right? From the beginning, because if you build that kind of foundation, when you have an accountant or CPA that's holding your hand from the very beginning, 5 years later, you're going to be so thankful that you did everything and you built a great foundation from the very beginning. Because I have clients right now that have been in business for over 10 years. And because they didn't build that solid foundation from the beginning, right now they're playing catch up. Not just with taxes. We're talking about hiring, firing people. They are in trouble. They've had employees suing them. You can avoid all that if you build that solid foundation at the very beginning. And when I said at the beginning, I mean like the very first and second year of doing business. The best advice that I can give.
Yeah. It's funny. So death and taxes. On occasion I'll get maybe a new client that comes in for a consultation, and they try to be like tough or brave about taxes, right?
Mm-hmm.
I always and typically they're men. Typically they're men, because men think they're tough, and they can solve all problems with whatever, right? And I tell them, hey, that's how they got Capone. That's how they got Al Capone, taxes.
Yes.
And then that typically puts things in perspective for people. Like, it doesn't matter how tough you think you are, like the government's gonna come, and there are believe me, there are places
Mhm.
for aggressive tax planning.
Yeah.
Payroll tax is not one of them.
Mhm.
Another one is sales tax. Sales tax is not really a place for aggressive tax planning. Aggressive
Right.
tax planning, if you want to be aggressive, and and by aggressive I mean like legal.
Yeah.
But you want to use the tax code to your benefit. You do it on income tax. You don't do it on payroll taxes. You just don't. That's a fool's game.
Right.
So,
There's another compliance that a lot of business owners don't always know about, or they just never heard about it, um, or they heard about it, but they don't know where is the threshold or where they need to start tracking this. And that's the Affordable Care Act.
mm,
So Affordable Care Act, all it is, for those that don't know, is a mandate. So when you are an employer that has 50 employees, that is the actual number. That's the key number. When you know you have 50 employees on payroll, there is a mandate that says you have to offer health benefit to your employees when you get to that 50 employee head count and up. So payroll companies can also help you track and create a report of the Affordable Care Act, so that when you get an audit on that, you be able to provide a report showing that you did in fact offer the health benefits to your employees. That's something that a lot of payroll companies offer. And I encourage clients that have 50 employees and more to start tracking that, because having to track that manually, it's very tedious work. It's a lot of time. But if you have a payroll system that can track that for you, it just makes it easy. If anyone just knock at the door and want to do an audit,
Yeah.
you can just provide the report showing that you offer that. That is the Affordable Care Act. A lot of my clients that have 50 and more employees usually know, but I found some that don't. And
Mhm.
so that's why I wanted to throw that one out there, because it's important, and people do get penalized for not tracking the Affordable Care Act too.
Yeah. Do you know about CalSavers? The new, well, it's not new, but it's now coming to light. This law that was passed in California regarding mandatory retirement benefits for employers.
I do. I
Yeah.
heard about it. If you can give me a little bit more information. In the payroll side, I learned that in the state of California, in 2020,
Mm.
starting January 1st, they want to have another mandate, which states if you have 50 employees and more, you're going to be required to offer retirement 401k, or sometimes of requirement.
Yeah.
But I don't know for sure that it's being the law has been passed yet. I'm still
Yeah.
waiting on that.
So the mandate is it's a mandatory reporting, and it's this kind of program where you are automatically enrolled, and it's your responsibility to go log on and either opt out of CalSavers,
Okay.
or report to the state of California that you're following that whatever the CalSavers has kind of put out for you. Okay. And so what it is by June of 2020, employers with more than 100 employees, and it doesn't have to be full-time employees, it could be employees at any period of time in the year,
Okay.
are mandated into this program. And then the following year it drops down to 50 employees or more, and then the following year it drops down to 5 employees or more. So basically the state of California, as I understand it, has created this like Roth program where as an employer, it's your responsibility to educate your employees on the opportunity to contribute to CalSavers and the opportunity to basically invest in your own retirement. So the good thing is that they're educating people, but you're forcing small mom and pop shops at 5 employees to have this additional administrative burden, and and the penalty is huge. It's a few $100 per employee. So essentially, if you have your own retirement how do you say it? Plan. Yeah, if you have your own retirement plan, then basically you report to CalSavers, hey, I have my own retirement plan, on opting out of CalSavers, and then you're good. But
that sounds like very similar to the Affordable Care Act.
It
as
is,
well.
and I mean, in the fact that it's your responsibility as the employee, as the employer, as the business owner, to follow these rules, and there's so many of them,
Wow.
and it's like it gets out of control. So,
do you think that from your perspective as an accountant, that the Social Security maybe in the future will disappear, and maybe that's why they're pushing this retirement mandate, because maybe, I don't know, 10 or 20 years from now, maybe they want to get rid of our Social Security?
yeah,
think?
if you go onto the Social Security's administration's website, they have a prediction as to when the money's going to run out, and it's I don't know how far down the road it is. I think it's over a decade. That they feel that they're secure. But off the record, we're speaking into cameras. I just feel like Social Security is the biggest Ponzi scheme in the world, but because it just is. But
you don't think that it would happen like in the next decade? Maybe
I'd probably not in 10 years, but maybe by the time I'm ready to collect Social Security, we're gonna have an issue.
Wow.
But that feeds into a lot of other problems. If the government really screws up that bad, then that's a big F you to the public, and
Yes,
and
pretty much.
and it would create a lot of civil unrest for a
Right.
lot of people. So,
Right.
I don't know.
But I mean,
Politics is a whole nother thing.
yes, exactly.
Yeah.
But I mentioned that because there's so many things changing right now with we live here in California, right? So it seems to me like everything starts in California when we're looking at nationwide, right? Everything starts here, and more and more regulations continue to be added to the employers.
Yeah.
But this is the reason why we're doing this, because we want to educate, the business owners, whether you're a small business owner, you're mid-size, or you have a big enterprise. There, all these little pieces of information is what can, determine if you're going to be in business, pretty much, because people can lose their business within the first 3 years if they're not, following the new regulations.
Yeah.
So, but I think that's why I was asking you. It's just something that my clients are asking me a lot. Like, hey, so with this retirement mandate, or do you think? And they keep asking me, but I really don't know. It looks like it. But I know my parents over 10 years ago, they said, oh, we're probably not gonna have Social Security in the next 10 years.
Yeah.
But we still have it, so I don't know, that could be something that will come up. But that's really, like, I am so passionate about educating the business owners about anything that has to do with the compliance of their business, because that's what is going ultimately to affect whether or not you're going to remain in business, or whether or not you're going to continue to grow your business, right? And sometimes when I talk to my clients, they look at me and they're like, Sherly, you just like keep telling me all these things that are making me scared, And I don't sit with my clients to bring that kind of news to them, but they need to know, because if I don't tell them, they might never hear about it, right? So a lot of our business owners are so focused on growing the business, revenue driven.
Of course, yeah.
They don't really have time to go and read or find out the latest and the greatest that's coming out of Washington, right? So it's our responsibility as professionals to bring that education. But I do get, sometimes my clients, they get nervous, and they're like, I know you're going to help me with the payroll, but they get anything that has to do with IRS,
yeah,
they get nervous, but it's something that you can avoid it. You have to tackle it. You have to take care of it.
Yeah, well, anxiety comes from just not knowing. So uncertainty creates anxiety. Even I've represented audits where, like, most of the anxiety happens before there's even a change. So like, a client, nobody wants to pay extra taxes, nobody wants to pay penalties. Okay,
Right.
but at the end of an audit, there's always a sigh of relief that it is over and that the uncertainty is gone. And, whether it's a no change audit or whether they've been assessed, some amount of money, there's relief and there's less anxiety. So, but playing into, what it is that you do as a consultant, and as bringing, the force of the payroll company behind you, is solving that issue of uncertainty. You bring in the tools, and software is incredible for helping reduce the number of errors, and then all the other resources too. So talking about all the doom and gloom, let's talk about something that actually is positive and good, which is one of the things that your payroll company does, and other payroll companies are doing it as well, is this WOTC credit, which is work opportunity tax credit. I want to talk about what kind of industries this is usually applicable towards, and then how somebody could get some of this tax credit, free money.
Yeah, so there are several tax credits out there, right? So the company I work for, we do specialize in work opportunity tax credit because we work with a lot of industries that want to take advantage of those credits, right? But they don't know about it. So the industry of restaurant, I call it hospitality industry because hospitality industry entails restaurants and hotels, entertainment, right?
Yeah.
Like bowling and things of that nature. But that is an industry where we see a lot of employee high turnover. So they're constantly hiring and people are constantly leaving. And the type of employees that they hire are usually the type that qualify for these taxes. So what qualifies an employee for the employer to receive the taxes is whether or not the employer's hiring veterans. So the government wants to make sure that the veterans are taken care of and that they're being employed by companies. So when any company hires veterans, that veteran can get up to $2,300 in tax credit. Now, not the veteran. The veteran qualifies for the $2,300.
Yeah.
The employer gets the $2,300 in a form of credit, tax credit.
Got it.
The second one would be like if you're an ex-felon.
Yeah.
So a lot of prisons, when people come out of the prisons, the government obviously don't want them to become homeless.
Right.
They want companies to hire them. And you find a lot of ex-felons in the restaurant industry. They learn while they're in prison, they learn to cook. They learn. So those are the typical employees that restaurants hire. So if you're an ex-felon and you hire somebody like that you will get a credit for that particular employee. If you hire employees that are getting any type of financial aid from the government, whether it is in the form of food stamp, Medicaid, financial aid, that employee also qualifies for that. Now, the amounts that the employer gets for each employee, it depends.
Yeah.
A veteran usually is about $2,300. But if you have someone who's getting Medicaid or from the government, they might get more than $2,300. So you can get anywhere between $825 all the way to like $9,100 per employee. So that's a chunk of money that a lot of times employers don't know that they can track as they're bringing the new hires. And our payroll system is able to track those new hires as they're being hired. So what happened is at the end of the year, we get all that information and we send it to the Department of Labor.
Yeah.
We do the work in the back end. And then at the end of the year, the Department of Labor sends us a letter with a total of credits that they found for that employer. So they send us the letter and then we send the letter to the employer. And we'll say, we found $50,000 in tax credit. The employer gets that letter and they take it to somebody like you, to their accountant or their CPA, so that they can apply the credits at the end of the year.
On the tax return, yeah.
Yes. It's just a way of the government to incentivize employers to hire this type of employees.
Yeah.
And it's money that, hey, Merry Christmas. You can get at the end of the year and you didn't even know. But those are credits that are sitting there. And if you don't take advantage of them, they're just sitting there.
Yeah. And I think we don't do WOTC here. All WOTC we actually outsource, or we have a payroll company like yourself who will calculate it. It's an administratively heavy thing to do because you have to report within a certain period of hiring this person. And, the time to do that is when you're onboarding them into the payroll system. It's seamless. It creates less friction and there's less chance of, leaving that money on the table. Right. One more credit is in the restaurant and hospitality industry is the Social Security tip credit. Do you know about that one? Yeah.
I know about it, but
it's not a payroll thing. It's it happens at my level.
Yeah.
So, basically the tip, the reason for the credit is that when you're paying your employees who are receiving tips, you are actually paying payroll taxes on the wages that you're paying them, and you're paying payroll taxes on the tips that they're receiving, because the tips have to go through payroll.
That's right. That's correct.
You understand that, right? So then the payroll company will calculate how much payroll taxes, Social Security and Medicare are the big ones, on those tips. But in fact, the tip is really not a transaction between you and your employee. It's a transaction between the patron or the client or the customer or whatever, and your employee, whoever's serving them, right? So you're kind of, as the employer, as the restaurant, let's say, stuck in the middle, having to pay this extra tax for money you never saw. It just so happened that it went through your hands, but it was never your money, right? It was the tips are not your money as the restaurant. And then so because of that, you're actually allowed to get that, usually all of it, most of it back, if not all of it back, on the tax return, as a tax credit. Yeah. And so, that could be, 6.2% on the amount of payroll taxes that you're paying on tips throughout the year. It sucks that you have to wait until the end of the year to recoup it, but it's better than leaving that money on the table.
That's great. I mean, I work with a lot of accountants and CPAs, and I did not know that part about California, but I also work with all 50 states. So sometimes, forgive me, it's hard to keep up with every state, but I do work with clients all over the country. So
yeah,
but that's good for me to know, because I do have restaurant clients here in the state of California, and I just learned a tipping point today.
Oh yeah, a tip on the tipping point. But yeah, there we go. Cool. So we do have some viewers. Viewers, if you're out there and you're watching, and you have any questions, please type them in now quickly. Otherwise, we're gonna start wrapping things up here.
That's great that you have your live audience watching. I did wanted to ask you a question because you are an accountant and I am not.
Yeah.
And a question that clients ask me a lot, and I always have to say, I'm not an accountant. I can't tell you.
Sure.
I can give you an advice on this, but when it comes to workers compensation, not workers compensation, the liability insurance, the workers compensation insurance.
Sure. Yeah.
Yeah. So the workers compensation insurance, I know it goes, from my end, I know that it goes hand in hand with the payroll, right? Because workers comps, they have to, it's based on actual wages. And I don't even know if you know the answer, but I'm just thinking because it has to do with taxes and audits. When I am an employer, and I have a workers' compensation insurance to cover my employees if they get hurt in the state of California, if I want to, like, I guess my question is, do I have to do an annual audit for my workers' compensation insurance? Is that something that I have to do as an employer or no? Because I don't know the answer to that.
Yeah, I honestly, it's outside of my realm too. It's these things are dictated by the insurance companies. The fact that you have to have workers' compensation, that's a legal thing, but the insurance companies are the ones who are requiring these annual audits. Typically they look at your DE9C, which is in California. It's it reports how much you pay each employee, and it lists all your employees out. And so, it's being dictated by the insurance companies whether or not you need an audit. I think most employers, do get an audit, I'm pretty sure. And probably the biggest insurance company that does workers' comp in California, or maybe even the nation, is State Fund, but there are a handful of other providers of workers' comp. So, yeah.
I wanted to know because I know that you deal with a lot of professionals, and that's something that I've been asked a lot. I know that there is an audit, but I don't know that it's mandated, like that they're gonna get an audit every year, the same way that you will get an audit for your taxes, right?
Yeah. So we got one of our viewers, Charles. I'm going to mispronounce his last name, Scapira. It's saying workers' comp will audit you on an annual basis. So, I mean, that's just part of the practice of the insurance company is to audit you, because that's their premiums are based off of how much you're paying your employees. So it would make sense that they would take a look at that stuff. Yeah.
Well, there it is. Look at this. We have somebody answering
thanks,
the question. Thank you, Charles.
Can I call you Chuck?
Yeah. So yeah, that's great. I think that my passion for business owners comes from my parents. My mom was a business owner.
Yeah.
And my dad was a CPA. But I mean, the biggest thing for me when I am talking about payroll is, again, just build a foundation. Do it from the beginning. Don't wait. Don't wait till it's too late, because when it's too late, it can cost you everything you have. And then why get into a business if you're not going to do it the right way, right? If people get into business because they want longevity, they want to have a business for years to come, right? They want to grow. And even if you don't want to grow and you just want to stay where you are, you want to have your business for a long time. You don't want it for 1 year or 2 years, right?
Yeah.
So that's going to be my biggest advice for those who are listening to us today. And I'm very thankful that you had me to do this podcast. I'm super fired up about education. And maybe the next person you bring will be somebody who's into the insurance, in the world of insurance, because that's a very wide,
oh my gosh, yes,
topic.
Yeah.
So,
all right, Sherly, I thank you for your time, and thanks for being on the show. So how do people get a hold of you?
Well, I work for the company. Can I mention the name or?
Yeah, whatever. Yeah.
So the name of the company is Alliance Payroll. We're a national company. We've been around for 30 years. I work locally here in the beautiful state of California, Southern California. And my email is swaterman@alliancepayroll.com. My phone number is 949-439-9448. I work, like I said, in all 50 states. So if you're somebody watching us in another state and you need our assistance, we can help you. We are headquarters in the Woodlands, Texas, but we do service our clients nationwide. Thank you.
Awesome. Thanks, Sherly.
Thank you so much for having me.
Yeah, of course.